Chapter 19. Former presentations of the subject. Section 1. The Physiocrats. Quesnay's Tableau économique shows in a few broad lines how the annual result of national production, defined in terms of value, is distributed by circulation in such a way that, with other circumstances remaining the same, simple reproduction can take place, i.e., reproduction on the same scale. From the material standpoint, it is always the previous year's harvest that forms the starting point of the production period. The numberless individual acts of circulation are thereby immediately grouped together in their characteristic social movement as a mass circulation between major economic classes of society that are defined by their functions. What is of interest for us here is that one part of the total product, which as an object of use, just like any other part, is the fresh result of the past year's labor, is also just a bearer of old capital value reappearing in the same natural form. It does not circulate, but rather remains in the hands of its producers, the class of farmers, to begin its service as capital there once again. Quesnay, in fact, includes in this constant capital part of the annual product elements that do not belong there, but he comes to grips with the main question thanks to the very narrowness of his mental horizon, in which agriculture is the only sphere of application of human labor that produces surplus value, and is therefore the only one that is really productive from the capitalist standpoint. The process of economic reproduction, whatever its specific social character may be, is in this area, agriculture, always intertwined with the process of natural reproduction. The readily apparent conditions of the latter illuminate those of the former, and keep at bay those confusions which are only introduced by the illusions of circulation. The label of a system of ideas is distinguished from that of other articles, among other things, by the fact that it deceives not only the buyer but often the seller as well. Quesnay himself, and his closest disciples, believed in their feudal signboard. Our academic pedants do the same to this very day. In point of fact, however, the physiocratic system is the first systematic conception of capitalist production. The representatives of industrial capital, the class of farmers, lead the whole economic movement. Agriculture is pursued on a capitalist footing, i.e., as the large-scale undertaking of the capitalist farmer, the immediate tillers of the soil or wage laborers. Production does not just produce articles of use, but their value as well. Its driving motive is to obtain surplus value, and the birthplace of surplus value is the sphere of production, not that of circulation. In the three classes that figure as bearers of the process of social reproduction, mediated by circulation, the direct exploiter of productive labor, i.e., the producer of surplus value, the capitalist farmer, is distinguished from the mere appropriator of the surplus value. The capitalist character of the physiocratic system already provoked opposition during its heyday, on the one hand from Linguet and Mabley, on the other from the defenders of free small-scale property in land. The retrogression in Adam Smith's analysis of the reproduction process is all the more striking, in that he not only elaborated on Quesnay's correct analyses, for example, generalizing Quesnay's original advances and annual advances into fixed and circulating capital, but in places fell back completely into the errors of the physiocrats. In order to show, for instance, that the farmer produces greater value than any other kind of capitalist, he says, quote, "No capital puts into motion a greater quantity of productive labor than that of the farmer. Not only his laboring servants, but his laboring cattle are productive laborers." A charming compliment for the laboring servants. In agriculture, too, nature labors along with man, and though her labor costs no expense, its produce has its value, as well as that of the most expensive workman. The most important operations of agriculture seem intended not so much to increase, though they do that too, as to direct the fertility of nature towards the production of the plants most profitable to man. A field overgrown with briars and brambles may frequently produce as great a quantity of vegetables as the best cultivated vineyard or cornfield. Planting and tillage frequently regulate more than they animate the active fertility of nature. And after all their labor, a great part of the work always remains to be done by her. The laborers and laboring cattle, therefore, employed in agriculture, not only occasion, like the workmen and manufacturers, the reproduction of a value equal to their own consumption, or to the capital which employs them, together with its owner's profits, but of a much greater value. Over and above the capital of the farmer and all its profits, they regularly occasion the reproduction of the rent of the landlord. This rent may be considered as the produce of those powers of nature, the use of which the landlord lends to the farmer. It is greater or smaller according to the supposed extent of those powers, or, in other words, according to the supposed natural or improved fertility of the land. It is the work of nature which remains, after deducting or compensating everything which can be regarded as the work of man. It is seldom less than a fourth, and frequently more than a third of the whole produce. no equal quantity of productive labor employed in manufactures can ever occasion so great a reproduction. In them, nature does nothing, man does all, and the reproduction must always be in proportion to the strength of the agents that occasion it. The capital employed in agriculture, therefore, not only puts into motion a greater quantity of productive labor than any equal capital employed in manufactures, but in proportion, too, to the quantity of productive labor which it employs, it adds a much greater value to the annual produce of the land and labor of the country, to the real wealth and revenue of its inhabitants. End quote from Book 2, Chapter 5, pages 462 to 463. Adam Smith says in Book 2, Chapter 1, quote, "The whole value of the seed, too, is properly a fixed capital." End quote. Here, therefore, capital is equal to capital value. This exists in a fixed form. Quote, "Though it goes backwards and forwards between the ground and the granary, it never changes masters, and therefore does not properly circulate. The farmer makes his profit not by its sale, but by its increase." End quote from page 375. The narrowness of this conception lies in Smith's failure to see what Quesnay had already seen, namely the reappearance of the value of the constant capital in a renewed form. Instead, he saw here only a further illustration, and moreover a false one, of his distinction between fixed and circulating capital. Hence, he missed an important aspect of the reproduction process. The progress in Smith's translation of original advances and annual advances into fixed capital and circulating capital consists in the word capital, this concept being generalized and freed from its special reference to the physiocratic agricultural sphere of application. The retrogression consists in the acceptance and the perpetuation of the concepts fixed and circulating as the decisive distinctions. Section 2. Adam Smith. Subsection A. Smith's General Perspectives. In Book 1, Chapter 6, page 153, Smith says, quote, "In every society, the price of every commodity finally resolves itself into some one or other, or all of those three parts, that is, wages, profit, and rent, and in every improved society, all the three enter more or less as component parts into the price of the far greater part of the commodities." He goes on to say, on page 155, quote, "Wages, profit, and rent are the three original sources of all revenue as well as of all exchangeable value." End quote. Later, we shall investigate in more detail this doctrine of Adam Smith's as to the component parts of the prices of commodities and of all exchangeable value. He goes on to say, quote, "Since this is the case, it has been observed with regard to every particular commodity taken separately, it must be so with regard to all the commodities which compose the whole annual produce of the land and labor of every country, taken complexly. The whole price or exchangeable value of that annual produce must resolve itself into the same three parts, and be parceled out among the different inhabitants of the country, either as the wages of their labor, the profits of their stock, or the rent of their land." End quote from Book 2, Chapter 2, pages 381 to 382. After Adam Smith has thus resolved both the price of all commodities taken separately and the whole price or exchangeable value of the annual produce of the land and labor of every country into three sources of revenue, for wage laborer, capitalist, and landlord, into wages, profit, and rent, he has to smuggle in a fourth element by an indirect route, namely the element of capital. He does this by his distinction between gross and net revenue. Quote, "The gross revenue of all the inhabitants of a country comprehends the whole annual produce of their land and labor. The net revenue, what remains free to them after deducting the expense of maintaining, first their fixed and secondly their circulating capital, or what without encroaching upon their capital they can place in their stock reserved for immediate consumption or spend upon their subsistence, conveniences, and amusements. Their real wealth, too, is in proportion not to their gross but to their net revenue." End quote from page 382. On this, the following points must now be made. 1. Adam Smith is expressly dealing only with simple reproduction, not with reproduction on an expanded scale or with accumulation. He speaks only of the expense of maintaining the functioning capital. The net revenue is that part of the annual product, whether of the whole society or of the individual capitalist, that can go into the consumption fund, but the scale of this fund must not be such as to encroach upon capital. One part of the value of both individual and social product, therefore, is neither resolved into wages nor into profit or rent, but into capital. 2. Adam Smith escapes from his own theory by means of a play on words, the distinction between gross and net revenue. Both the individual capitalist and the entire capitalist class, the so-called nation, receive in place of the capital used up in production a commodity product. The value of this, which can be depicted in proportionate parts of the product itself, on the one hand replaces the capital value used up, and hence forms income in the most literal sense, revenue. Revenu, past participle of revenir, French to return. But let it be noted, capital revenue or capital income, on the other hand, it comprises components of value that are parceled out among the different inhabitants of the country, either as the wages of their labor, the profits of their stock, or the rent of their land, i.e., what is understood by income in everyday life. The value of the whole product, whether that of the individual capitalist or that of the country as a whole, accordingly forms income for someone, but on the one hand capital income, on the other hand a revenue distinct from this. Thus, what was eliminated when the value of commodities was analyzed into its component parts is introduced again through the back door by the ambiguity of this word revenue. But only the components of the product's value that already exist in the product can be taken in. If capital is to come in as revenue, then capital must previously have been spent. Adam Smith goes on to say, quote, "The lowest ordinary rate of profit must always be something more than what is sufficient to compensate the occasional losses to which every employment of stock is exposed. It is this surplus only which is net or clear profit." What capitalist sees profit as including necessary outlays of capital? What is called gross profit comprehends frequently not only this surplus but what is retained for compensating such extraordinary losses. End quote from Book 1, Chapter 9, pages 198 to 199. But this means no more than that a part of the surplus value, treated here as a part of the gross profit, has to form an insurance fund for production. This insurance fund is created by a part of the surplus labor, which thereby directly produces capital, i.e. the fund set aside for reproduction. As far as the outlay for the maintenance of the fixed capital, etc. is concerned, see the passages quoted above, the replacement of the fixed capital consumed by new capital in no way constitutes a new investment of capital, but is simply a replacement of the old capital value in new form. As far as the repair of the fixed capital goes, however, something that Adam Smith also counts together with the maintenance costs, its cost forms a part of the price of the capital advanced. If the capital invests this only gradually and according to need, while his capital is already functioning and can invest it out of a profit already tucked away instead of having to invest it all at once, this in no way changes the source of this profit. The component of value from which it derives simply indicates that the workers provide surplus labor for the repair fund as well as for the insurance fund. What Adam Smith's explanation of fixed capital actually boils down to is that it is the part of the industrial capital advance that is fixed in the production process, or as he says on page 377, quote, "affords a revenue or profit without circulating or changing masters," end quote, or according to page 374, either remains in his possession or continues in the same shape. Adam Smith now tells us that not only should the whole fixed capital be excluded from the net revenue, i.e. from revenue in its specific sense, but so should that entire part of the circulating capital required to maintain, repair, and replace the fixed capital. In point of fact, all capital that does not exist in a natural form destined for the consumption fund. Quote, "The whole expense of maintaining the fixed capital must evidently be excluded from the net revenue of the society. Neither the materials necessary for supporting their useful machines and instruments of trade, their profitable buildings, etc., nor the produce of the labor necessary for fashioning those materials into the proper form can ever make any part of it. The price of that labor may indeed make a part of it, as the workmen so employed may place the whole value of their wages in the stock reserved for immediate consumption. But in other sorts of labor, both the price, i.e. the wage paid for this labor, and the produce, in which this labor is embodied, go to this stock. The price to that of the workmen, the produce to that of other people, whose subsistence, conveniences, and amusements are augmented by the labor of those workmen." End quote from Book 2, Chapter 2, pages 382 to 383. Here, Adam Smith has stumbled upon a very important distinction between the workers involved in the production of means of production and those involved in the direct production of means of consumption. The commodity product of the former contains in its value a component equal to the sum of the wages paid, i.e. to the portion of capital laid out on the purchase of labor power. This portion of value exists bodily as an adequate part of the means of production produced by these workers. The money they receive as wages forms revenue for them, and yet their labor has not produced consumable products, either for themselves or for others. These products, therefore, do not themselves form any element of the portion of the annual product that is designed to supply the social consumption fund, in which alone net revenue can be realized. Adam Smith forgets to add that what holds here for wages holds equally for the value component of the means of production that forms the revenue of the industrial capitalists, in the first instance, has surplus value under the headings of profit and rent. This component of value also exists in means of production, non-consumables. Only after it is converted into money can it withdraw a certain amount of the means of consumption produced by the second type of worker, corresponding to its own price, and transfer this into the individual consumption fund of its proprietors. All the more should Adam Smith have seen that the portion of the annually produced means of production, equal in value to the means of production functioning within the sphere of production, the means of production with which means of production are made, and therefore a portion equal in value to the constant capital applied here, is absolutely excluded, not only by the natural form in which it exists, but also by its capital function from being any component of value that constitutes revenue. In relation to the second type of worker, who directly produces means of consumption, Adam Smith's definitions are not quite exact. He says in particular that in these types of labor, both the price of labor and the product go to the direct consumption fund. The price, i.e. the money received as wages, to that of the workman, the product to that of other people, whose subsistence, conveniences, and amusements are augmented by the labor of those workmen. But the worker cannot live off the price of his labor, the money in which his wages are paid. He realizes his money by using it to buy means of consumption, and these may consist partly of types of commodities which he has himself produced. However, his own product may be one that is only consumed by the exploiters of labor. After Adam Smith has thus completely excluded the fixed capital from the net revenue of a country, he continues, quote, "But though the whole expense of maintaining the fixed capital is thus necessarily excluded from the net revenue of the society, it is not the same case with that of maintaining the circulating capital. Of the four parts of which this latter capital is composed, money, provisions, materials, and finished work, the three last, it has already been observed, are regularly withdrawn from it, and placed either in the fixed capital of the society or in their stock reserved for immediate consumption. Whatever portion of those consumable goods is not employed in maintaining the former, the fixed capital, goes all to the latter, to the stock reserved for immediate consumption, and makes a part of the net revenue of the society. The maintenance of those three parts of the circulating capital, therefore, withdraws no portion of the annual produce from the net revenue of the society, besides what is necessary for maintaining the fixed capital." End quote from Book 2, Chapter 2, page 384. All this is simply the tautology that the part of the circulating capital that does not serve for the production of means of production goes into the production of means of consumption, i.e. into the part of the annual product that is destined to form society's consumption fund. But what is important is the immediately following passage. Quote, "The circulating capital of a society is in this respect different from that of an individual. That of an individual is totally excluded from making any part of his net revenue, which must consist altogether in his profits. But though the circulating capital of every individual makes a part of that of the society to which he belongs, it is not upon that account totally excluded from making a part likewise of their net revenue. Though the whole goods in a merchant's shop must by no means be placed in his own stock reserved for immediate consumption, they may be placed in that of other people, who from a revenue derived from other funds may regularly replace their value to him, together with its profits, without occasioning any diminution either of his capital or of theirs." End quote. We learn here, then, 1. Just like the fixed capital, and that circulating capital needed for its reproduction and maintenance, he forgets its functioning, so the circulating capital of each individual capitalist involved in the production of means of consumption is also totally excluded from his net revenue, which can only consist of his profits. The part of his commodity product that replaces his capital cannot therefore be resolved into components of value that form revenue for him. 2. The circulating capital of each individual capitalist forms part of the circulating capital of the society, just as with each individual fixed capital. 3. The circulating capital of the society, even though it is only the sum of the individual circulating capitals, possesses a character distinct from the circulating capital of an individual capitalist. The latter can never form a part of his revenue, but as against this, a section of the former, i.e. that consisting of means of consumption, can simultaneously form a part of the society's revenue, or in other words, as he previously said, the net revenue of the society is not necessarily reduced by this part of the annual product. In actual fact, what Adam Smith here calls circulating capital is the annually produced commodity capital that the capitalists who produce means of consumption annually cast into circulation. This, their entire annual commodity product, consists of consumable articles, and therefore constitutes the fund in which the net revenues of the society, including wages, are realized, or in which they are spent. Instead of selecting as his example the goods in the retail shop, Adam Smith should have chosen the stocks amassed in the storehouses of the industrial capitalists. If Adam Smith had now, in discussing what he calls circulating capital, fitted together the fragmentary ideas that expressed themselves on him previously, while he was contemplating the reproduction of what he calls fixed capital, he would have arrived at the following result. 1. The annual social product consists of two departments. The first comprises the means of production, the second the means of consumption. The two have to be treated separately. 2. The total value of the part of the annual product that consists of the means of production is divided as follows. One portion is simply the value of the means of production consumed in the creation of these means of production, and therefore only the capital value reappearing in a new form. A second part is equal to the value of the capital laid out on labor power, or the sum of wages paid out by the capitalist in this sphere of production. A third portion of value, finally, forms the source of profits for the industrial capitalists in this category, including rent of land. The first portion, according to Adam Smith, the reproduced fixed capital component of all the individual capitals occupied in this first department, is, quote, totally excluded from making any part of the net revenue, either that of the individual capitalist or that of the society. It always functions as capital and never is revenue. In this respect, the fixed capital of each individual capitalist is in no way distinguished from the fixed capital of the society. However, the other value components of the society's annual output of means of production, value components that also exist, therefore, as adequate parts of this total mass of means of production, do indeed form at the same time revenue for all agents involved in its production, i.e., wages for the workers, profits and rents for the capitalists. For the society, however, they do not form revenue, but capital, even though the annual social product simply consists of the sum of the products of its individual capitalist members. Most of the products in the first department can, by their very nature, function only as means of production, and even those that could function as means of consumption, if need be, are designed to serve as raw or ancillary material for new production. The revenue-forming value components of the first department function as means of production and therefore as capital, not in the hands of their producers, however, but rather in those of their users, who are 3. The capitalists in the second department, the direct producers of means of consumption. They replace the capital the capitalists in the first department used up in the production of means of consumption, except insofar as this capital is converted into labor power and represents the sum of the wages of the workers in the second department. While this used-up capital, which now exists in the hands of capitalists producing it in the form of means of consumption, forms for its part, from the social standpoint that is, the consumption fund in which the capitalists and workers in the first department realize their revenue. If Adam Smith had pursued his analysis as far as this, little more would be required for the solution of the entire problem. He almost hit the nail on the head, for he had already noted that certain portions of value of one particular kind, means of production, of the commodity capital in which the total annual product of the society exists, although they form the revenue for the individual workers and capitalists engaged in their production, were not a component of the society's revenue, while the value component of the other kind of product, means of consumption, although it formed capital value for its individual owners, the capitalists engaged in this sphere of investment, was however simply a part of the social revenue. This much is already clear from the investigation so far. Firstly, even though the social capital is simply the sum of the individual capitals, and therefore the annual commodity product, or commodity capital, of the society is equal to the sum of the commodity products of these individual capitals, and although, therefore, the same analysis of the commodity value into its components that holds for each individual commodity capital must also hold for the society as a whole, and in the last analysis actually does hold, yet the form of appearance which these components assume in the overall process of social reproduction is a different one. Secondly, even on the basis of simple reproduction, we find not only the production of wages, variable capital, and surplus value, but also the direct production of new constant capital value. This is true even though the working day consists only of two parts, one in which the worker replaces the variable capital and the other in which he produces surplus value, profit, rent, etc. In other words, the daily labor that is spent in reproducing the means of production, whose value breaks down into wages and surplus value, is realized in new means of production which also replace the constant capital component expended in the production of the means of consumption. The main difficulties arise not in the treatment of accumulation, but already in that of simple reproduction, although the greater part of these have already been resolved in what was said above. This is why both Adam Smith, in his Wealth of Nations, Book 2, and before him Quesnay, in his Tableau économique, started with simple reproduction, whenever they had to deal with the movement of the annual social product and its reproduction by way of circulation. Subsection B. Smith's resolution of exchange value into V plus S. Adam Smith's dogma that the price or exchangeable value of every single commodity, and thus of all the commodities comprising the annual social product, he correctly assumes capitalist production everywhere, is composed of or resolves itself into the three component parts, wages, profit, and rent, can be reduced to the thesis that commodity value is equal to V plus S, i.e. the value of the variable capital advanced plus the surplus value. As the following quotation shows, we have Smith's express permission to reduce profit and rent to a common unit which we call S. We leave aside for the time being all secondary factors, and in particular all apparent or actual divergences from the dogma that the value of commodities consists exclusively of the elements that we designate as V and S. In manufacture, quote, The value which the workmen add to the materials resolves itself into two parts, of which one pays for their wages, the other the profits of their employer upon the whole stock of materials and wages which he advanced. End quote from Book 1, Chapter 6, page 151. Quote, though the manufacturer, i.e. the manufacturing worker, has his wages advanced to him by his master, he in reality costs him no expense, the value of those wages being generally restored, together with the profit, in the improved value of the subject upon which his labor is bestowed. End quote from Book 2, Chapter 3, page 430. Quote, the part of stock that is laid out in maintaining productive hands, after having served in the function of a capital to him, the employer, constitutes a revenue to them, the workers. End quote from Book 2, Chapter 3, page 432. In the same chapter, Adam Smith expressly states, quote, the whole annual produce of the land and labor of every country naturally divides itself into two parts. One of them, and frequently the largest, is in the first place destined for replacing a capital, or for renewing the provisions, materials, and finished work, which have been withdrawn from a capital. The other for constituting a revenue either to the owner of this capital, as the profit of his stock, or to some other person as the rent of his land. End quote from page 431. Only one part of the capital, as Adam Smith has just told us, also forms revenue for someone, namely the part invested in the purchase of productive labor. This part, the variable capital, firstly performs the function of a capital in the hands of the employer and for him, and then it constitutes a revenue for the productive worker himself. The capitalist transforms one part of his capital value into labor power, and precisely in this way into variable capital. But as a result of this transformation, it is not only this part of the capital, but his entire capital that functions as industrial capital. The worker, the seller of labor power, receives its value in the form of his wage. In his hands, labor power is simply a saleable commodity, the commodity from whose sale he lives, and which therefore forms the only source of his revenue. It is only in the hands of its buyer, the capitalist, that the labor power functions as variable capital. And in fact, the capitalist only appears to advance the purchase price of the labor power, for its value has already been supplied to him by the worker. After Adam Smith has shown us that the value of the product in manufacture is equal to V plus S, where S is the profit of the capitalist, he tells us that in agriculture, the workers, besides the reproduction of a value equal to their own consumption, or to the variable capital which employs them, together with its owner's profits, over and above the capital of the farmer and all its profits, they regularly occasion the reproduction of the rent of the landlord. End quote from Book 2, Chapter 5, page 463. The fact that the rent goes into the hands of the landlord is quite beside the point for the question we are dealing with here. Before it passes into his hands, it must first exist in the hands of the farmer, i.e. of the industrial capitalist. It must form a value component of the product before it becomes revenue for anyone. Thus, for Smith, rent and profit are both only components of the surplus value that the productive worker constantly reproduces together with his own wages, i.e. with the value of the variable capital. Rent and profit are parts of the surplus value S, and in this way Smith resolves the price of all commodities into V and S. The dogma that the prices of all commodities, and therefore of the annual commodity product, can be resolved into wages plus profit plus rent of land, assumes the form, even in the intermittent esoteric part of Smith's work, that the value of any commodity, and thus of the society's annual commodity product, is equal to V and S, i.e. the capital value laid out on labor power and constantly reproduced by the workers, plus the surplus value added by the workers through their labor. Smith's end result reveals to us at the same time the source of his one-sided analysis of the components into which commodity value is divisible. For more on this, see below. For the fact that these components also form the various sources of revenue for classes with different functions in production has nothing to do with the quantitative determination of each of these components and the limits of their total values. When Adam Smith says, wages, profit, and rent are the three original sources of all revenue as well as of all exchangeable value, all other revenue is ultimately derived from some one or other of these, all kinds of confusion are heaped together. 1. All members of society who do not figure directly in the reproduction process, whether as workers or not, can receive their share of the annual commodity product, i.e. their means of consumption, in the first instance only from the hands of those classes to whom this product firstly accrues, productive workers, industrial capitalists, and landlords. To this extent, their revenues are, in a material sense, derived from wages, the wages of the productive workers, profit, and ground rent, and hence appear, in contrast to these original revenues, as derivative. On the other hand, however, the recipients of these derivative revenues, in the sense just given, draw them by way of their social functions as king, priest, professor, prostitute, mercenary, etc., and they can therefore view these functions of theirs as the original source of their revenue. 2. And this is the high point of Smith's stupid blunder, After he has begun by correctly defining the value components of the commodity and the total value product embodied in them, and then by showing how these components form an equal number of different sources of revenue, thus after he has derived revenues from value, he proceeds in the reverse direction, and this remains the predominant idea in his work, and makes these revenues, instead of just component parts, into original sources of all exchangeable value, thereby throwing the doors wide open to vulgar economics. Subsection C. The constant capital component. We shall now see how Adam Smith tries to conjure the constant part of capital out of commodity value. Quote, in the price of corn, for example, one part pays the rent of the landlord. End quote. The origin of this component of value has as little to do with the circumstance that it is paid to the landlord and forms revenue for him in the form of rent, as the origin of the other value components has with the fact that they form sources of revenue as profit and wages. Quote, another part pays the wages or maintenance of the laborers, and laboring cattle, he adds, employed in producing it, and the third part pays the profit of the farmer. These three parts seem, they seem indeed, either immediately or ultimately to make up the whole price of corn. End quote. This whole price, i.e. its quantitative determination, is absolutely independent of its distribution among three kinds of person. Quote, a fourth part, it may perhaps be thought, is necessary for replacing the stock of the farmer, or for compensating the wear and tear of his laboring cattle and other instruments of husbandry. But it must be considered that the price of any instrument of husbandry, such as a laboring horse, is itself made up of the same three parts: the rent of the land upon which he is reared, the labor of tending and rearing him, and the profits of the farmer who advances both the rent of this land and the wages of this labor. Though the price of the corn, therefore, may pay the price as well as the maintenance of the horse, the whole price still resolves itself, either immediately or ultimately, into the same three parts of rent, labor, he means wages, and profit. End quote from Book 1, Chapter 6, page 153. This is literally all that Adam Smith has to say in support of his astonishing doctrine. His proof consists simply in the repetition of the same assertion. He concedes, by way of example, that the price of corn not only consists of V and S, but also of the price of the means of production consumed in the production of corn, i.e. that it consists of a capital value that the farmer did not invest in labor power. Nevertheless, he says, the prices of all these means of production can themselves be decomposed, just like the price of corn itself, into V and S. Smith simply forgets to add, as well as into the price of the means of production used up in their own creation. He refers us from one branch of production to another, and from this again to a third. The statement that the entire price of commodities is either immediately or ultimately resolvable into V and S would only cease to be an empty subterfuge if Smith could demonstrate that the commodity products whose price is immediately resolved into C, the price of the means of production consumed, plus V plus S, are finally compensated for by commodity products which entirely replace these consumed means of production, and which are for their part produced simply by the outlay of variable capital, i.e. capital laid out on labor power. The price of these latter commodities would then immediately be V and S, and in this way the price of the former two, C, V and S, where C stands for the component of constant capital, would ultimately be resolvable into V and S. Adam Smith himself did not believe that he had given such a proof with this example of the Scotch pebble collectors, who according to him, 1. Do not supply any kind of surplus value but simply produce their own wages, and 2. Do not employ any means of production, though in fact they do in the form of baskets, sacks, and other containers for carting off the pebbles. We have already seen above how Adam Smith refutes his own theory without even becoming aware of its contradictions. The source of these, however, is to be sought precisely in his own scientific premises. The capital converted into labor produces a value greater than its own. How? Because, says Smith, the workers impart to the things on which they work, during the production process, a value that besides the equivalent for their own purchase price, forms a surplus value accruing to their employers, profit and rent. This they do indeed, and they can do no other. What applies to the industrial labor of a single day, however, applies also to the labor set in motion by the entire capitalist class in the course of a whole year. The society's total annual value product, therefore, can be broken down only into V and S, into equivalent with which the workers replace the capital value spent on their own purchase price and the additional value that they have to provide for their employers over and above this. These two elements of the commodity value, however, also form sources of revenue for the different classes involved in the reproduction process. The first, wages, the revenue of the workers; the second, surplus value, of which the industrial capitalist keeps one part for himself in the form of profit, while another is deducted as rent, the revenue of the landlord. How can there be any other component of value if the annual value product contains no other elements besides V and S? Here we are concerned with simple reproduction. Since the total annual labor is resolved into labor needed for the reproduction of the capital value laid out on labor power and labor needed for the creation of a surplus value, where can still more labor come from to produce a capital value not laid out on labor power? The matter stands as follows. 1. Adam Smith defines the value of a commodity by the amount of labor that the wage laborer adds to the object of labor. He says, in fact, to the materials, as he is dealing with manufacture, which works up what are already products of labor. But this in no way affects the matter at hand. The value that the worker adds to a thing, and this adds is our Adam's own expression, is quite independent of whether the object to which the value is added already has value before this addition or whether it does not. The worker therefore creates a value in the commodity form. According to Adam Smith, this is, on the one hand, an equivalent for his wages, this part being therefore determined by the value of the wage, depending on whether this is higher or lower. The value he has added here by his labor is in this respect that needed to produce or reproduce his wages. Another part, however, is added by the worker by further labor above this limit, and forms surplus value for his capitalist employer. Whether this surplus value remains entirely in the hands of the capitalist, or is partially taken off him by third parties, does not in the least affect either the qualitative determination of the surplus value added by the wage laborers, that it is all surplus value, or its quantitative determination, the amount. It is value just the same as any other value component of the product, simply distinguished by the fact that the worker has not received any equivalent for it, and does not receive one subsequently, for this value is instead appropriated by the capitalist without an equivalent. The overall value of the commodity is determined by the amount of labor that the worker has spent in its production. One part of this total value is characterized as being equal to the value of the wage, i.e. an equivalent for wages. The second part, therefore, the surplus value, is necessarily characterized by the same token as being equal to the total value of the product minus the value component that is the equivalent for the wage, i.e. equal to the excess value created in the production of the commodity over the value component contained in it that is the equivalent for wages. 2. What holds for a commodity product in a single capitalist business by some individual worker holds also for the annual product of all branches of industry taken together. What applies to the day's labor of an individual productive worker applies also to the annual labor performed by the entire class of productive workers. This class fixes, Smith's expression, in the annual product a total value determined by the amount of labor annually expended, and this total value breaks down into one part determined by that portion of annual labor in which the working class creates an equivalent for its annual wage, in point of fact this wage itself, and another part determined by the additional annual labor in which the workers create a surplus value for the capitalist class. The annual value product contained in the annual product thus consists of only two elements: the equivalent for the annual wage received by the working class, and the surplus value annually supplied to the capitalist class. But the wage forms the revenue of the working class, and the annual sum of surplus value the revenue of the capitalist class. The two therefore represent, and this viewpoint is correct where it is a matter of depicting simple reproduction, the relative shares in the annual consumption fund, and are realized in it. There is therefore no room left for the constant capital value, for the reproduction of the capital functioning in the form of means of production. However, Adam Smith expressly says, in the introduction to his work, that the parts of the commodity value that function together as revenue coincide with the annual product destined for the social consumption fund. Quote, "To explain in what has consisted the revenue of the great body of the people, or what has been the nature of those funds which have supplied their annual consumption, is the object of these 4 first books." End quote from page 106. And in the very first sentence of this introduction, he states, quote, "The annual labor of every nation is the fund which originally supplies it with all the necessaries and conveniences of life which it annually consumes, and which consists always either in the immediate produce of that labor or in what is purchased with that produce from other nations." End quote from page 104. Smith's first error, then, is to equate the value of the annual product with the annual value product. The latter is simply the product of the current year's labor. The former includes, on top of this, all those elements of value that were used in the production of this annual product, but which were produced in the previous year, and partly in still earlier years. Means of production whose value only reappears, and which, as far as their value is concerned, have been neither produced nor reproduced by the labor spent during the current year. This confusion enables Adam Smith to juggle away the constant component in the value of the annual product. The confusion is itself based on a further error in his fundamental conception. He does not distinguish the twofold character of labor itself: labor that creates value by the expenditure of labor power, and labor that creates objects of use values as concrete, useful labor. The total sum of commodities annually produced, i.e. the total annual product, is the product of the useful labor operating in the current year. It is only by the social application of labor in an intricate system of varieties of useful labor that all these commodities have come into being. It is only in this way that the value of the means of production used up in their production is retained in their total value and reappears in a new natural form. The total annual product is thus the result of the useful labor expended during the year, but only one part of the value of this product has been created during the year. This part is the annual value product, which represents the amount of labor actually performed during the year itself. When, therefore, Smith says in the passage just quoted, the annual labor of every nation is the fund which originally supplies it with all the necessaries and conveniences of life which it annually consumes, etc., he one-sidedly adopts the standpoint of useful labor. It is this, to be sure, that has brought all these means of subsistence into their consumable form. He forgets here, however, that this would have been impossible without the collaboration of means of labor and objects of labor handed down from earlier years, and that the annual labor, therefore, inasmuch as it forms value, has in no way created the entire value of the products prepared by it, that the value produced is smaller than the value of the product. If we cannot reproach Adam Smith for going no further in this analysis than his successors, even if an approach to the correct conception was already available with the Physiocrats, we can say that he fell increasingly into confusion, and the principal reason for this was that his esoteric conception of commodity value was constantly being thwarted by the exoteric ideas which on the whole prevail in his work, even though his scientific instinct did permit this esoteric standpoint to reappear from time to time. Subsection D. Capital and revenue in Adam Smith. That component of a commodity's value, and therefore also of the annual products, which simply forms an equivalent for the wage, is equal to the capital advanced by the capitalist in wages, i.e. to the variable component of the total capital he advances. The capitalist receives back this component of the capital value advanced in the form of a newly produced value component of the commodity supplied by the wage laborers. Whether the variable capital is advanced in the sense that the capitalist pays in money the share accruing to the worker of a product which is not yet ready for sale, or which, although finished, has not yet been sold by the capitalist, whether he pays the worker with money that he has already received from the sale of the commodity that the worker supplied, or whether he has anticipated this money by credit in all of these cases, the capitalist spends variable capital which accrues to the workers as money, and he possesses, in return, the equivalent of this capital value in that portion of his commodity's value with which the worker newly produces the share in the total value of these that accrues to him, with which, in other words, he has produced the value of his own wages. Instead of giving him this portion of value in the natural form of his own product, the capitalist pays him the same in money. For the capitalist, therefore, the variable component of the capital value he has advanced now exists in the commodity form, while the worker has received in the form of money the equivalent for the labor power he has sold. Thus, while the part of the capital advanced by the capitalist that has been transformed into variable capital by the purchase of labor power functions as active labor power within the production process itself, and is newly produced, i.e. reproduced by the expenditure of this power as new value in the commodity form, i.e. reproduction, the new production of the capital value originally advanced, the worker spends the value or price of the labor power he has sold on means of subsistence, on the means to reproduce his labor power. A sum of money equal to the variable capital forms his income. In other words, his revenue, which he receives only so long as he can sell his labor power to the capitalist. The wage laborer's commodity, his own labor power, functions as a commodity only insofar as it is incorporated into the capitalist's capital, and functions as capital. On the other hand, the capital spent as money capital on the purchase of labor power functions as revenue in the hands of the seller of labor power, the wage laborer. Different processes of circulation and production are intertwined here, and Adam Smith does not distinguish between them. Firstly, acts belonging to the circulation process. The worker sells his commodity, labor power, to the capitalist. The money with which the capitalist buys it is for him money invested for the purpose of valorization, i.e. money capital. It is not spent, but merely advanced. This is the real sense of the advance, the Physiocrats' advance, quite independently of where the capitalist acquires the money itself. What is advanced for the capitalist is every value that he pays for the purpose of the production process, whether this is done in advance or after the event. It is advanced to the production process itself. All that happens here is what happens in any sale of commodities. The seller hands over a use value, in this case labor power, and receives the value of it in money, realizes its price. The buyer hands over his money and receives in return the commodity itself, in this case labor power. Secondly, in the production process, the labor that has been bought now forms part of the functioning capital, and the worker himself functions here simply as a special natural form of this capital, as distinct from the elements of capital that exist in the natural form of means of production. During this process, the worker adds value to the means of production that he transforms into a product by spending his labor power to the value of this labor power, leaving aside surplus value. In this way, he reproduces for the capitalist, in commodity form, the part of the former's capital advanced to him in wages, or due to be advanced, produces for him an equivalent for this capital. He produces for the capitalist, in other words, the capital that the capitalist can advance afresh in the purchase of labor power. Thirdly, with the sale of the commodity, therefore, a part of its sale price replaces for the capitalist the variable capital that he advanced, and therefore enables him to buy labor power afresh, just as it enables the worker to sell it again. With all commodity purchases and sales, inasmuch as these transactions are simply considered by themselves, it is completely immaterial what happens in the hands of the seller to the money received for his commodity, and what happens in the hands of the buyer to the item of use that he purchased. It is also completely immaterial, therefore, insofar as it is simply the circulation process that is under consideration, that the labor power bought by the capitalist reproduces capital value for him, while the money paid as the purchase price of this labor power forms revenue for the worker. The value of the worker's item of trade, his labor power, is affected neither by the fact that this forms revenue for him, nor by the fact that the use of his commodity by the buyer reproduces capital value for the buyer. Because the value of labor power, i.e., the adequate sale price of this commodity, is determined by the amount of labor needed to reproduce it, and this amount of labor is itself determined by that needed to produce the means of subsistence that the worker needs, i.e., the amount of labor needed to maintain his life, the wage becomes the revenue from which the worker has to live. Adam Smith is completely wrong to say on page 432 that the part of the capital employed in maintaining productive hands, after having served in the function of a capital to him, the capitalist, constitutes a revenue for them, the workers. The money with which the capitalist pays for the labor power that he buys serves the function of a capital to him inasmuch as he thereby incorporates labor power with the material components of his capital, and hence for the first time puts his capital in a position in which it can function as productive capital. The difference is that the labor power is a commodity in the hands of the worker, and not capital, and it constitutes a revenue for him insofar as he can regularly repeat its sale. It functions as capital after the sale, in the hands of the capitalist during the production process itself. What serves two purposes here is labor power. In the hands of the worker, it is a commodity sold at its value. In the hands of the capitalist who has bought it, it is a power producing both value and use value. The money, however, that the worker receives from the capitalist, he receives only after he has given him the use of his labor power, after this has already been realized in the value of the product of labor. The capitalist has this value in his hand before he pays for it. So it is not the money that functions twice, first as money form of the variable capital, then as wages. It is rather the labor power that has functioned twice, first as a commodity, when the labor power is sold, when the wage to be paid is stipulated, the money operates merely as an ideal measure of value, and it in no way needs to be in the capitalist's hands yet. Secondly, in the production process where it functions as capital, i.e. as an element creating both use value and value in the hands of the capitalist. It has already supplied the equivalent to be paid to the worker, in the commodity form, before the capitalist pays this to the worker in the money form. The worker therefore himself creates the payment fund from which the capitalist pays him. But this is not all. The worker spends the money he receives on maintaining his labor power, and thus, if we consider the capitalist class and the working class as a whole, on maintaining for the capitalist the only instrument by means of which he can remain a capitalist. On the one hand, therefore, the constant purchase and sale of labor power perpetuates the position of labor power as an element of capital, and in this way capital appears as the creator of commodities, articles of use that have a value. This is also how the portion of capital that buys labor power is regularly restored by the product of labor power itself, so that the worker himself constantly creates the capital fund out of which he is paid. On the other hand, the constant sale of labor power becomes a source of maintaining the worker's life that he perpetually has to repeat, and his labor power thus appears as the means by which he draws the revenue from which he lives. Revenue here means nothing more than the appropriation of values effected by the constantly repeated sale of a commodity, labor power, and in this connection, these values themselves serve only towards the constant reproduction of the commodity to be sold. To this extent, Adam Smith is correct to say that the value component of the product created by the worker, for which the capitalist pays an equivalent in the form of the wage, becomes a source of revenue for the worker. But this affects the nature and the size of this portion of commodity value just as little as the value of the means of production is affected by the fact that they function as capital values, or the nature and length of a straight line by the fact that it functions as the base of a triangle or the axis of an ellipse. The value of labor power remains just as independently determined as that of any means of production. This component of commodity value does not consist of revenue as an autonomous factor constituting it, nor does this component of value resolve itself into revenue. This new value, constantly reproduced by the worker, forms a source of revenue for him, but it does not follow from this inversely that his revenue forms a component of the new value he has produced. What determines the volume of his revenue is the share in the new value he creates that is paid to him, not the other way around. If this portion of the new value forms revenue for him, this simply shows what becomes of it, how it is used, and has as little to do with its formation as with the formation of any other value. If my income is 10 shillings per week, then the circumstances of this weekly income affect neither the nature of the 10 shillings value nor its magnitude. Just as with any other commodity, so in the case of labor power too, its value is determined by the amount of labor needed to reproduce it. The fact that this amount of labor is determined by the value of the means of subsistence needed by the worker, and is thus the labor needed for the reproduction of these means of subsistence, is a characteristic of this particular commodity, labor power, but it is no more peculiar to it than the fact that the value of draft cattle is determined by the means of subsistence needed for their maintenance, and thus by the amount of human labor needed to produce the latter, is peculiar to these draft cattle. The category of revenue is the root cause of Smith's whole trouble. For him, the different types of revenue form the component parts of the commodity value annually produced, newly created, whereas in actual fact it is the other way around. It is the two parts into which this commodity value is divided for the capitalist, the equivalent for the variable capital that he advanced in the money form for the purchase of labor, and the other portion of value that belongs to him, although it has cost him nothing, the surplus value, that forms the source of revenue. The equivalent of the variable capital is advanced once again in labor power, and to this extent forms a revenue for the worker in the form of his wage. The other part, the surplus value, since it does not have to replace for the capitalist any of the capital advanced, can be spent by him on means of consumption. Both necessities and luxuries can be consumed as revenue instead of forming capital of any kind. The precondition for this revenue is the commodity value itself, and its components are distinguished for the capitalist only to the extent that they form either an equivalent for or a surplus over the variable capital that he has advanced. Both of these consist of nothing but labor power spent in the course of commodity production, set flowing as labor. They do not consist of income or revenue, but rather of expenditure of labor. After this quid pro quo, in which revenue is made into the source of commodity value, instead of this commodity value being the source of revenue, commodity value now appears to be composed of the various kinds of revenues. These are determined independently of one another, and the total value of the commodity is determined by adding together the value of these revenues. But now this question arises. How can we determine the value of each of these revenues from which the commodity value is supposed to derive? In the case of wages, this can in fact be done, because wages are the value of the commodity labor power, and the latter can be determined, like the value of any other commodity, by the labor needed for its reproduction. But as for surplus value, or in Adam Smith's case, its two forms, profit and rent, how are these to be determined? Here we are left with empty prattle. At some points, Adam Smith depicts wages and surplus value, or wages and profit, as components out of which the commodity value or price is put together, while at others, and often almost in the same breath, he depicts them as parts into which the commodity value resolves itself. The latter, however, means that the commodity value is given first, and that various parts of this value accrue to different persons involved in the production process in the form of different revenues. This is in no way identical with the composition of value from these three components. If I define the lengths of three straight lines independently, and then make these three lines components of a fourth straight line equal in length to their sum, this is in no way the same procedure as if I start with a given straight line and divide this for some purpose or other, resolve it, so to speak, into three parts. The length of the line in the first case invariably changes with the length of the three lines whose sum it forms. In the latter case, the length of the three segments is limited from the beginning by their forming parts of a line of a given size. In point of fact, if we stick to what is correct in Smith's presentation, i.e. that the value contained in the society's annual commodity product, which is newly created by the year's labor, is equal, just as with any single commodity or the product of a day, week, etc., to the sum of the variable capital advanced, i.e. to that value component destined to serve again for the purchase of labor power, plus the surplus value which the capitalist can realize in items for his individual consumption, in the case of simple reproduction and with other conditions remaining the same. If we bear in mind, moreover, that Smith lumps together labor in its value-creating capacity as expenditure of labor power with labor in its capacity of creating a use value, i.e. labor spent in useful, purposive form, then the whole conception boils down to this. The value of any commodity is the product of labor. So too, therefore, is the value of the product of a year's labor, or the value of society's annual commodity product. Since, however, all labor can be resolved into one, necessary labor time in which the worker simply reproduces an equivalent for the capital advanced in purchasing his labor power, and two, surplus labor, by which he supplies the capitalist with a value for which the latter pays no equivalent, i.e. a surplus value, all commodity value can then be resolved simply into these two different components. And in the last analysis it forms, as wages, the revenue of the working class, and as surplus value, that of the capitalist class. As far as the constant capital value is concerned, however, i.e. the value of the means of production consumed in the production of the annual product, there is no way of telling how this value comes into the value of the new product, except in the mere phrase that the capitalist charges it to the buyer when he sells his commodity. But ultimately, since the means of production are themselves the products of labor, this portion of value can in turn consist only of an equivalent for the variable capital in the surplus value. That is, it can consist only of the product of necessary labor and surplus labor. If the values of these means of production function in the hands of their employers as capital values, this does not hinder them from being divisible originally, and if one goes to the same root of it in other people's hands, even though earlier, into the same two portions of value, i.e. into two different sources of revenue. A correct point in all this is that in the movement of the social capital, i.e. the totality of individual capitals, things look different from the way they do when each individual capital is taken separately, i.e. from the standpoint of each individual capitalist. For the latter, commodity value can be resolved into one, a constant element, a fourth element, as Smith says, and two, the sum of wages and surplus value, i.e. wages, profit, and rent. From the social standpoint, however, Smith's fourth element, the constant capital value, simply vanishes. Subsection E Summary. The absurd formula that the three revenues of wages, profit, and rent form three components of commodity value derives in Smith's case from the more plausible formula that commodity value resolves itself into these three components. This too is false, even on the assumption that commodity value can be divided simply into the equivalent for the labor power used up and the surplus value created by the latter. This error, however, is based in turn on a deeper and true foundation. Capitalist production rests on the fact that the productive worker sells his own labor power as a commodity to the capitalist, in whose hands it then functions simply as an element of his productive capital. This transaction, the sale and purchase of labor power, does not just introduce the production process, but implicitly determines its specific character. The production of a use value, and even of a commodity, something that can also be undertaken by independent productive workers, is here only a means for the production of absolute and relative surplus value for the capitalist. In analyzing the production process, therefore, we saw how the production of absolute and relative surplus value determines 1. The duration of the daily labor process, and 2. The whole social and technical shape of capitalist production. It is within this process that the distinction emerges between the mere maintenance of value, of the constant capital value, and the actual reproduction of the value advanced, the equivalent for labor power, and the production of surplus value, i.e. of value for which the capitalist neither advanced a previous equivalent, nor advances one after the event. The appropriation of surplus value, of a value over and above the equivalent of the value advanced by the capitalist, even though it is introduced by the purchase and sale of labor power, is an act performed within the production process itself, and forms an essential moment of the latter. The introductory act of circulation, the purchase and sale of labor power, itself depends in turn on a distribution of the social elements of production, which is the presupposition and premise of the distribution of social products, i.e. the separation of labor power as a commodity for the worker and the means of production as the property of non-workers. At the same time, however, this appropriation of surplus value, the separation of value production into the reproduction of the value advanced, and the production of a new value that does not replace any equivalent, a surplus value, in no way affects the substance of value itself and the nature of value production. The substance of value is and remains nothing more than expended labor power, labor independent of its particular useful character, and value production is nothing but the process of this expenditure. If the feudal serf, for example, expends his labor power for 6 days of the week, i.e. works for these 6 days, it makes no difference to the fact of this expenditure of labor power as such that he may work for 3 of these days on his own field and 3 others on his lord's field and for his lord. Both his voluntary labor for himself and his forced labor for his lord are equally labor, inasmuch as this is considered as labor in relation to the values, or even the useful products, created by it. There is no distinction between these 6 days' labor. The distinction is solely related to the different situations which have given rise to the expenditure of his labor power in the 2 halves of the 6-day working period. It is just the same with the necessary and surplus labor of the wage laborers. The process of production disappears in the finished commodity. The fact that labor power was expended to create it now appears in the form that the commodity has the following concrete property. It possesses value. The magnitude of this value is measured by the amount of labor expended. The commodity value cannot be resolved into anything further and consists of nothing more. If I draw a straight line of a certain length, I have, in the first place, produced a straight line, only symbolically, of course, as I am aware from the start, by my manner of drawing, practiced in accordance with certain rules, laws, that are independent of me. If I divide this line into 3 segments, which may be required for a certain problem, then each of these 3 pieces remains a straight line, as before, and this division does not resolve the line whose parts they are into anything other than a straight line, for example, a curve of some kind. Just as little can I divide this line of a given length in such a way that the sum of these parts is greater than the undivided line itself. The length of the undivided line, in other words, is not determined by the length of the segments into which it is divided. It is rather the relative lengths of the latter that are limited in advance by the limits of the line of which they are parts. In this respect, the commodity produced by the capitalist is in no way distinguished from a commodity produced by an independent worker, by a community of workers, or by slaves. In our case, however, the entire product of labor and its entire value belongs to the capitalist. Just like any other producer, he has first to transform the commodity into money by selling it, before he can manipulate it any further. He must convert it into the form of the universal equivalent. Let us consider the commodity product as it is before it is transformed into money. It belongs completely to the capitalist, but while is the product of useful labor, as a use value, it is in every respect the product of a labor process just completed. The same is not true of its value. A part of this value is merely the value of the means of production used up to produce the commodity, which reappears in a new form. This value has not been produced in the process of producing the commodity, for the means of production already possess this value before the production process in question and independently of it. They entered this process as the bearers of this value, and all that has been replaced and changed is simply its form of appearance. For the capitalist, this part of the commodity value forms an equivalent for the portion of the constant capital value he advanced that has been consumed in the commodity's production. It previously existed in the form of means of production. It now exists as a value component of the newly produced commodity. Once the latter has been converted into money, this value now existing in money must be transformed back again into means of production, into its original form as determined by the production process and by its own function within this. The value character of a commodity is in no way changed by the function of this value as capital. A second portion of the commodity's value is the value of the labor power that the worker sells to the capitalist. This is determined, just like the value of the means of production, independently of the production process which the labor power is to enter, and is fixed in an act of circulation, the purchase and sale of labor power before this goes into the production process. In the course of his function, the expenditure of his labor power, the wage laborer produces a commodity value equal to the value that the capitalist has to pay him for the use of his labor power. He gives the capitalist this value in commodities, and the capitalist pays him the same in money. If this part of the commodity value is for the capitalist only yet equivalent for the variable capital that he has to advance in wages, this makes absolutely no difference to the fact that it is a commodity value newly created during the production process, consisting exactly like the surplus value of past expenditure of labor power. Just as little is this affected by the fact that the value of labor power, paid by the capitalist to the worker in the form of wages, assumes for the worker the form of a revenue, and that in this way not only is the labor power continuously reproduced, but also the class of wage laborers as such, and with it the basis of capitalist production as a whole. However, there is more to the commodity's value than the sum of these two components. Over and above them both, there is still the surplus value. This has in common with the value component that replaces the variable capital advanced in wages that it is a value newly created by the workers, congealed labor. It is just that it does not cost anything to the owner of the total product, the capitalist. This circumstance is what enables the capitalist to consume it completely as revenue, as long as he does not have to deduct parts of it for others with a stake in it. For example, rent for the landlords, in which case these portions then constitute the revenues of third parties of this kind. The same circumstance was also the driving motive for our capitalist to concern himself with commodity production at all. But neither his original benevolent intention to hunt out surplus value, nor the subsequent spending of this as revenue by himself and others affects the surplus value as such. It in no way alters the fact that it is unpaid congealed labor, nor does it alter its size, which is determined by quite other factors. Given that Adam Smith already wanted to concern himself, in dealing with commodity value, with the roles of the various parts of this play in the overall process of reproduction, it should have been evident that if certain portions function as revenue, others must just as constantly function as capital. And on his logic, this means that these should also have been described as constituent parts of the commodity value, or parts into which it is resolved. Adam Smith identifies commodity production in general with capitalist commodity production. The means of production are capital from the beginning. Labor is wage labor, and hence, quote, the number of useful and productive laborers is everywhere in proportion to the quantity of capital stock which is employed in setting them to work, end quote from the introduction, page 105. In short, the various factors of the labor process, objective and personal, appear from the start in the character masks of the era of capitalist production. The analysis of commodity value therefore directly coincides with the question as to how far this value is, on the one hand, simply the equivalent for the capital laid out, and how far, on the other hand, it constitutes free value that does not replace any capital value advanced, i.e. is surplus value. The portions of commodity value compared from this standpoint are thereby transformed surreptitiously into its independent component parts, and ultimately into the sources of all value. A further conclusion is that commodity value is composed of revenues of various kinds, or alternatively is resolved into these revenues, so that it is not the revenues that consist of commodity value, but rather the commodity value that consists of revenues. But just as it scarcely affects the nature of a commodity value as commodity value, or of money as money, whether it functions as capital value or not, so equally a commodity value is scarcely altered by the fact that it goes on to function as revenue for this person or that. The commodities Smith is dealing with here are commodity capital from the start, and therefore include surplus value as well as the capital consumed in their production, i.e. they are commodities produced in the capitalist manner, the result of the capitalist production process. This last should therefore have been the object of prior analysis, together with the process of valorization and value formation that it involves. And since the very presupposition of this is in turn commodity circulation, its presentation also requires, therefore, an independent and prior analysis of the commodity. Even when Smith, in his esoteric aspect, occasionally comes up with something correct, he takes account of value formation only in connection with the analysis of commodities, i.e. the analysis of commodity capital. Section 3. Later Writers. Ricardo reproduces Adam Smith's theory almost verbatim. Quote, it must be understood that all the production of a country are consumed, but it makes the greatest difference imaginable whether they are consumed by those who reproduce or by those who do not reproduce another value. When we say that revenue is saved and added to capital, what we mean is that the portion of revenue so said to be added to capital is consumed by productive instead of unproductive laborers. End quote from Principles, page 169. In point of fact, Ricardo completely accepted Smith's theory of the resolution of commodity price into wages and surplus value, or variable capital and surplus value. What he takes issue with Smith over are 1. The components of surplus value. He eliminates ground rent as a necessary element of it. And 2. Ricardo breaks down commodity price into these components. The magnitude of value thus comes first. He takes the sum of the components as a given magnitude, rather than deriving the magnitude of value of the commodity after the event by adding together its components, as Smith often does, even against his own better judgment. Ramsay remarks against Ricardo, quote, he always seems to consider the whole produce as divided between wages and profits, forgetting the part necessary for replacing fixed capital. End quote from An Essay on the Distribution of Wealth, published in Edinburgh in 1836, page 174. What Ramsay understands by fixed capital is what I call constant capital. Quote, fixed capital exists in a form in which, though assisting to raise the future commodity, it does not maintain laborers. End quote from page 59. Adam Smith balked at the logical conclusion of his resolution of commodity value, and thus of the value of the annual social product, into wages and surplus value, i.e. simply into revenue. The conclusion that the total annual product could then be entirely consumed. It is never the original thinkers who draw the absurd conclusions. They rather leave this for the Says and McCullochs. Say certainly has an easy time of it. What is for one person an advance of capital is for the other revenue and net product, or was so at least. The distinction between gross and net product is purely subjective, and, quote, thus the entire value of all products has been distributed in society as revenue. End quote from Treatise on Political Economy, page 64. Quote, the total value of any product is composed of the profits of the landlords, the capitalists, and the artisans. Thus wages figure here as artisans' profits, who have contributed to its production. This means that the society's revenue is equal to the gross value produced, and not, as the sect of economists, the Physiocrats, believed, only equal to the net product of the soil. End quote from page 63. This discovery of Say's was taken over by Proudhon, among others. Stork also accepts Adam Smith's doctrine in principle, but finds the application made of it by Say to be untenable. Quote, if it is held that the revenue of a nation is equal to its gross product, i.e. that no capital, he should say no constant capital, needs to be deducted, it must also be conceded that this nation can consume the entire value of its annual product unproductively, without making the least inroad on its future revenue. The products that compose the constant capital of a nation are not consumable. End quote from Stork, Considerations of the Nature of National Revenue, published in Paris, 1842. Stork has forgotten to tell us how the existence of this constant portion of capital fits in with the analysis of prices that he has taken over from Smith, in which commodity value contains only wages and surplus value, but no portion of constant capital. It is only through Say that he realizes that this price analysis leads to absurd results, and his own last word on it is, quote, that it is impossible to resolve the necessary price into its simplest elements. End quote from Course on Political Economy, page 141. Sismondi, who deals particularly with the relation between capital and revenue, and in actual fact makes his particular conception of this relationship the differentia specifica of his new principles, did not utter a single scientific word or contribute one jot or tittle to the explanation of the problem. Barton, Ramsay, and Cherbuliez make attempts to go beyond Smith's conception. They fail because they pose the problem one-sidedly from the start, by not clearly separating the distinction between constant and variable capital from the distinction between fixed and circulating capital. John Stuart Mill, too, reproduces the doctrine handed down by Adam Smith to his successors, with his customary air of self-importance. The result is that Smith's confusion persists to this day, and his dogma forms an article of orthodox belief in political economy.